Dubai real estate market is currently entering the Great Divide. While general headline they talk about record transaction volume, the technical data for 2026, it shows a massive supply side pressure that can potentially massively affect specific communities, while other communities will remain completely untouched, or shall I say resist the most if we go into a bearish cycle. Today we're looking at 420,000 units currently under construction, and we will identify exactly which 5 areas will survive if there is a bearish cycle, and also the 3 areas where we are potentially going to see inventory tsunami. If you are an investor looking for Dubai property investment with actual longevity, this is the most important data. You will see this here. My name is Saliq Zahoor. I'm the founder of Blog Properties. I have been working in Dubai real estate for over 14 years now. I'm an engineer by qualification and a real estate broker by passion. That combination gives me something most brokers cannot offer. I also understand the financial and trading part of the business as well as the technical side of real estate as well, which is something that stands me out from the crowd. I'm also a partner in a construction business, and we have completed more than 50 renovation and extension projects in communities like Dubai Hills, District 1, Jumeirah Island, Arabian Ranches, and also Al Barari. So what I'm sharing with you today is not advice which is I'm reading from somewhere. This is what I have done hands-on right here in the community and in the city. Let's look at the blank canvas problem. The biggest mistake investors make is buying into a community where land is, I will not use the word infinite, but sufficient. If a developer can keep launching phase 4, 5, 6, 7, your property value has no moat. In a market correction or a bearish cycle, the only thing that protects your equity is finite supply. We are looking at projected rental softening in 2026, but it is not hitting the whole city equally. People are moving inward as fuel cost, traffic congestion increase. The value of proximity to the city center will skyrocket. This is why areas like District 1, Dubai Hills Estate, communities close to Sheikh Zayed Road, the Jumeirah Strip, these are not just communities, these are safe haven assets. Even if the rental market softened by 5% in these zones, supply will get absorbed in days, not in months. The first area under extreme pressure would be Jumeirah Village Circle. This is an epicenter of supply tsunami with more than 30,000 apartments coming online. But I look at more than just the unit count, I look at infrastructure. The recent activation of paid parking in JVC has fundamentally changed the tenant experience. JVC used to have shared spaces in many buildings and townhouse clusters, and these are the tenants who were staying in JVC because JVC used to offer free parking. But unfortunately or fortunately, now the parking has been paid. Most of these tenants, they will either decide to move away from the community, or else what will happen is that these tenants will negotiate lower rents with their landlords, because the delta or the difference will now have to go to the parking subscription as well. So what will happen in communities like this? There will be only one driver: price. The cheaper, you will rent quickly, and that's how the market will proceed if the bearish cycle prevails. The second trap that I would say is called the location lag, specifically the outer strip, which is the Dubai Land Strip, including Silicon Oasis, Dubai Land, International City Phase 1, 2. These areas were sold on future potential infrastructure. But when the market corrects, tenants trade future promise for current reality. These tenants, if the market will be bearish, they will try to pay the same amount of money and move closer to their workspace to save time. And again, time is very important. We have traffic problem here as well. And the third is Business Bay equity gap. Now, if you see Business Bay, again, it's a different market within a market. we have seen projects sold at 3,500 dirhams per square feet, while in secondary market, some projects are trading at 2,000 to 2,200 dirhams per square foot. Now, that gap is sensitive for off-plan investors. When those units will hand over in 2026, rental yield may not cover the mortgage or will not be what they would have anticipated at the time of purchase. So these are the areas that I would potentially look into it if I am an investor in these areas, and I will then prepare my contingency plan to make sure that I can navigate through this cycle if the cycle comes in successfully. Now, addressing the supply part of it, let me tell you something with experience from the previous cycle and what I have witnessed exactly. In a bearish market cycle, what happens is that in any community, the tenants, they become picky and they try to first opt for those buildings who offer a better living experience. And even if you go to any of these communities that I have mentioned earlier in terms of the supply segment, in every community you will find certain buildings which are best of the best in that community. Let me give an example. I'll take the name. In JVC in 2018-17, during that market cycle, the buildings which were having the highest occupancy rate was Ellington buildings, Belgravia. And Belgravia offered something to tenants and homeowners in that community that no one could potentially think about it. The quality, the size, the living experience, the amenities, it was so incredible that even in that cycle, just to give you a real example, in that market, when the 3-bedroom rent was averaging 60 to 65,000 that time in JVC average, a Linton building, a 3-bedroom, I personally rented for 120,000 dirhams. Now that's almost double. That's a substantial difference in pricing in one single community. But I can tell you that that difference exists in pretty much all segments of market, in all sub-communities, based on building to building. So whenever you invest, and I have been saying it repeatedly, you must make sure that you are buying in a project which is the best in the class in that community, so that if anything happens to the cycle, your product is the first choice product among the end users, whether buyers or tenants. Now, unfortunately, some people, and most of them you would have bought in those communities where there are same cookie cutter, similar typical layouts with offering nothing special. And again, you are part of crowd, you will be treated as a crowd. You cannot stand out. So that's it. Now let's move to the next part, which are what are the safe havens that will resist the most if the bearish cycle comes in. Number 1, District 1 MBR City. This is a low density fortress. You cannot build more land next to a crystal lagoon, and there is not much land available this close to the city, and this is where the active investment will win in the long term. There will be two segments in this market. You will have the ROI segment, which is the rental return, and there will also be a renovation model, and we are currently doing some renovations, and the renovation model will still be successful in these communities, not only in District 1. I will point out a few more in this model, because anyone who works in DIFC, Business Bay, downtown Sheikh Zayed Road corridor, this is the closest inland villa community. So these people, they for sure will buy, and you have not sufficient supply. Like you have phase 1, 2, District 1 East, including phase 3, which is almost mature now. Then the new supply is coming in District 1 West, and the previous phases, they will go for renovation because those are older properties, need overhaul, and the newer properties will get occupied, and the whole reason would be less supply, closer proximity to the city center. Number 2 is Palm Jumeirah beachfront. They are not building more fronts on the Palm. These are trophy assets, and the owners here, they are high net worth individuals who are not under distress mortgage pressure until or unless there is an exception. So they do not need to sell, which means that the price floor will stay high. And there is one thing I would like to clarify here. Before the conflict, a lot of people were asking ridiculously high prices. Those people will come to the realistic number. Now, you cannot take that example and say that, oh, the market has corrected. These people were actually way above the actual market. So that's why these people will now come to the realistic level, but overall the market will resist in that area. Next, we have Emirates Living Strip, which is Meadows, Lakes, including Emirates Hills. And I would also include in that strip Jumeirah Island. These are mature communities, landscape is established, road network fixed, and even during correction, families stay put. That stability is what protects your asset in the long term and in any bearish cycle. Now, in the next section, I'm going to discuss about the landlord defenses and how you can potentially make sure that you are getting the maximum out of your property if the market changes. If you own a property in Dubai, your 2026 strategy must be occupancy over ego. Let me repeat, occupancy over ego. I see landlords keeping units vacant for 3 months, trying to chase peak 24 rents. Let's do the math. If you lose 2 months for rent while waiting for a higher number, you have actually already lost almost 16% of your annual income. Mathematically, it is superior to sign a tenant today at a 5% discount than wait 60 days for a higher price. In my own portfolio, in fact, before recording this video, I had a negotiation with a tenant who is planning to renew. We're implementing what we call a flexible 3 strategy: extra month, flexible check, and early renewal incentive. We are also focusing heavily on value hooks. For example, if a property is dated, we might also add, okay, I'll send someone to do all the maintenance you need, I'll pay for that. And we want to make sure that our units are in the top 1% of that quality in that community or in that building. Because in a crowded market, quality is the only thing that will protect you from the price war competition. And you need to make sure that your product stands out in that specific category. So that's pretty much for it. The 2026 cycle is not about whether the market will correct. It's about where it will correct, and smart money is moving toward undersupplied segment and inward close to the city center in the best possible buildings and best possible communities. So do not be that investor holding a mid-market apartment in a supply-heavy community. If you want to see the exact transaction data for your specific area, or you're looking for your exit strategy for, shall I use the word, trap property, reach out to me directly. My WhatsApp link is in the description, and please share this video to your network. And I promise you this value can help you to make sure that if, God forbid, the cycle turns bearish, they have the knowledge and experience from someone who has lived in the cycle to navigate through with the maximum output. Thank you very much, and I'll see you in the next video.